It is Tuesday, March 14th, 2023. This is Red Ben. You can get a hold of me on Twitter at RedBenTrader. You can learn more about trading with a systematic process using execution algo by getting a hold of my coach, Simon. Trade, the letter N, wordperform at gmail.com. You may be able to get a 5-day free pass to the paid trading room if it's open to membership, depending on when you're watching this. If you're watching it live, if not this month, I believe we will have room next month. But you can ask Simon about it. So what we're going to be looking at is primarily NQ, although both markets had tradable opportunities today. Let me just show you what's going on here. Wait a minute. Okay, there we go. So on the candlestick chart here, should be able to see that. Let me double check. Yeah. So if we came into the day. So overnight. This is yesterday, right? We had the big gap. Let's see. So yesterday traded volatilely overnight, and then we had the drop in the morning, pre-market, like bank fears, and then remember Sunday night it ramped up here to the voodoo range level 12,216, and then Monday it crashed like 1, 2, 3, 4, 5 voodoo range levels, almost exactly. No, it doesn't have to be perfect. So that was clearly a sign that there were real sellers in this market. There were other time frame sellers here. Otherwise, we would have only gotten maybe 1 or 1.5 VR. You're not going to get 4 plus. So when we opened, we got this nice like Morningstar reversal pattern kind of looking thing. The problem here, I mean, this did look really bullish. If anybody was watching by the time it opened, my coach was already saying like, look, you guys don't short this. We're deep in the hole, right? Like that. It wasn't that hard of a trade, I didn't think. But you needed to be able to fade this. This is the short that everybody got stuck on, is shorting underneath this, and it couldn't take this low out. But my concern on the bigger time frame is that move it trapped underneath the low from Friday, right? It got underneath it, but then closed the day higher. But my problem, personally, so here, whenever you do this, when you have a really big wick, but it closes higher, it tests lower but closes higher than the previous low, there's a good chance you're going to get a squeeze, like relatively good. The next day is not always a trend day, but there's a good chance you're at least going to retrace at least a part of whatever caused this move. So if you look, this is where the consolidation sort of began for this big move. And prior to that, they had been selling relentlessly here, right, on Thursday. So this was the poorly auctioned area here from the value area high of the consolidation, which was 12,187, let's say, all the way up to 12,493. That whole area is relatively poorly auctioned. There is a consolidation zone in here. Technically, it would be, you could probably do this. So that aligns pretty nicely with the 12,293.50 voodoo range level. And then you can see that the POC of that is here at 12,329.50, and the value area high of that consolidation is 12,352. So the idea is, if we can get up here above that and stay up there, this is done, because we've already tested below a low and found buyers closing a medium term candle above this low, and so the expectation should be some sort of squeeze, at least testing usually above this high or this high, sometimes retracing all the way if they've been stacked like this. If you can get into this value area, which again 12,293.50 was the key level for me that I wanted to see us close over if I wanted to be bullish, um, then chances are we're gonna head into this and renegotiate this and potentially go higher, right? Um, whenever I see this big wick, the problem is realize that that is a relatively short term trade. Having this big of a wick here does create a higher time frame magnet, um, and it's better if you can go re-auction that right away. So I was personally hoping for a gap down. Um, not like because I'm like anti U.S. economy or something. I'm just saying like from a trader's point of view, today would have been easier for me to trade had we gotten a gap down. But instead, as you can see, we got CPI that came in like within expectations. We retested the low of this consolidation value area right here and found buyers, clearly indicating that the direction was up. So the problem was is that was 30 minutes before the market opened, and this candle formed really fast. So it looks kind of obvious, or might look kind of obvious that like, oh, that's the breakout. You should just buy that. But it occurred really fast and it was pre-market. And so I personally didn't take that trade. But if you were short, you knew you were in trouble here. And on pullbacks, on subsequent pullbacks, the idea should have been, I probably want to get out of here, out of the short, assuming I can't close back underneath 12.182.50, because if you test up here for half an hour, maybe an hour, and then pull back in and close back inside here, we remember there's a big old magnet here, and the closer you get to it, the more likely we're going to go re-auction it. So we have to keep that magnet in mind. But again, until the stuck shorts who sold under Friday's low, until they have given up, we're not going to be able to get back there. And so we did get a really nice pullback today that I personally was able to catch some of the short side. And what I wanted was I wanted a test of this 12.185.25 level, and I wanted to see, are we ready to go back and auction the lows or not? I knew that if we took out the open of the day, here, let's see, I gotta go back to the 30-minute chart. I knew that if we took out the open of the day, here, that there was a pretty good chance that that low was going to get re-auctioned. The sneaky part today was they did it in ES, the weaker one where all the banks are in. They couldn't take it out or even test it in NQ. So once this low got put in, and yet the 30-minute candle closed above this previous hammer low, it should have been relatively clear that we were done, particularly because it was at location. It was right here at the value area high and all these other resistances. You know, I might have wanted to see this retested and known that it would if we could get underneath the open. But if you can't do it, you can't do it, right? And like I said, the challenge here was, for me, and the reason I did not trade it well, to say the least, is that because I had a pretty good trade that I definitely did not trade optimally. So here is the open in ES. See that? We traded through the open and closed a 30-minute candle below that open. So I was watching that closely, and my short was actually on ES because I took it with options. And so I was when I didn't know if I was going to hold that overnight or not. And when it closed the 30-minute candle below the open, I was thrilled and thinking, okay, there's no way that this little purple pivot is going to hold. We're going to rip right through this. We're going to re-auction this overnight, and we're headed for Thursday's low. And that would have made sense had I not recognize, or assuming that you didn't recognize that NQ, the stronger of the two, was unable to close even below this hammer low from an hour ago. So NQ strength basically meant that ES's weakness here, this See, this doesn't look like much on ES. It doesn't look like a big old hammer, really. You have to make it pretty big. And we actually closed the 30-minute below the open. And like I said, I thought that was important, particularly since ES traded below this low here, the overnight, the London low, the London open low. It traded below it after the open. See that? So and yeah, I thought for sure we were headed back here, but when NQ bounced, I should have immediately been on guard for this purple pivot to hold, and it touched it and held it perfectly, right? So I was a little bit late to identifying that what I wanted to happen on NQ wasn't going to happen because it didn't meet the criteria. It did not close below this value area high. And even though they technically did in ES, I don't have it drawn here, but they did. I can draw it real quick here. I'll show you. So if you go before CPI, I'll show you. They look quite a bit different, and it gets a little complicated when these two look different. You have to watch both all of a sudden, and I did not adjust to that at all. Well, I didn't adjust to it very well. So here, I can take it all the way to there. It doesn't really matter. We can do this one. So they clearly gave up that value area high from the consolidation here, and we're stuck underneath it. So I was not paying attention to the relationships between these two lows, or the close and the low, because from my point of view, they were already stuck inside consolidation, and I should just be short, right? So my expectation here on ES was, hey, they've been trading differently. Just because NQ didn't do it doesn't mean ES, doing it is not relevant. And so as long as they hold this, I'm fine. Well, what happened was they absolutely plowed through the value area high. They only spent 1, 2, 3, 4, 5. So that's 2.5 hours inside the value area. You would expect that they would come back and at least test the POC if there were any sellers left. And instead they did not. Hi, honey. Yes, Ronan. Okay, I know. It's playtime. They could not even test the POC here, and instead gave you this huge candle up. And so, and you could, it should make sense that there was some sellers in here. I mean, there'd been sellers there for a long time. Dude, you're gonna have to chill, man. Sorry. So at some point in here, you have to kind of know, you gotta, if you were looking long, you have to know that that's your target, right? But the trouble is because the two were so different, it was very difficult for me in that 30-minute period to determine whether or not I wanted to hold the short on ES or not. And I've been practicing like a little more complicated like spread trades and things like that with options, and considered leaving the puts and buying NQ, like doing like, I don't know, like fancy stuff, right? And instead of just being like, hey, it's clearly not working, like take your money, right? It's not like I turned it into a loser, but it was, I think they were up like almost $300 a contract, and by the time I got out of there, they were up like 125 or something. It was pretty severe, simply because I hesitated, right? And I don't always make the best decisions, even though the analysis was correct. There was an oversight, right? I was looking at ES more closely, these levels, and on NQ, it was something totally different, and it was a lot stronger. And that strength, because they do have a lot of shared companies, all you need is a little bit of strength from one or the other, and they can start to break the rules, quote unquote. So even though we spent a lot of time down here, we didn't get to the other side. And when those rules break, you want to pay attention. So I was able to get out like once the long setup started to work on NQ, I was like, this is not good. And so I had to go and cut, I just decided to cut it rather than like hedge it and all that. I was just like, let's just reanalyze this, because what you thought was going on is obviously not going on, and the trade did what I thought it would do, and then didn't continue. So I wish I would have made that decision a little bit more decisively, but one way or another, I don't really care whether or not what it does from here. Like when it comes to that trade was broken because I saw it as, hey, if you can hold in here, we should be headed to this side of it. Well, we tried and we did not even reach it, and they rejected. So if it, based on the edge that I know I have, I no longer had a valid trade entry, or trade setup, I mean. So the right decision there is just get out of the trade. But anyway, the interesting thing, if in my opinion, at this point now, like forgetting about the trade now, right, and just looking at this from analysis, like from a point of view of analysis, the sellers starting to lose momentum right at the voodoo range level 39.55. Well, it wasn't the voodoo range level last week, but it is now, right? So right here is where the voodoo range level developed, and you can see that every single time they got above it, sellers showed up, right, repeatedly, and that is part of the reason why it's now an important level. And today as well, once we traded over it and then gave it up, we got a pretty nice drop. And so the question is what happens if we can get above that level and then retest it from above and it holds? Could we get some kind of like massive squeeze? And I think the answer is probably yes, but you can't take that trade until that actually happens, because as you can see, like what happened on Friday, if you just use this as a breakout buy, you got absolutely smoked, right? Yeah, exactly. Ronan agrees. And then same here on Sunday night. If you took this as a breakout buy, you got absolutely smoked. Instead, it actually, and by this point you did know it was there, and here it actually rejected the level and gave you a really nice follow-through trade, like a continuation trade here. If this was the impulse move, then this is the continuation trade. Like that is the way to use these if you're going to use them for entries. You don't sell the breakdown of them, you buy the retest that holds, right? So here, you wouldn't sell the breakdown, but when the retest holds, you know you can sell this, and you get the bigger move. Well, same here. You wouldn't buy the breakout, but if we can break out, and we come back, and we test into this, and basically anywhere in this purple area, and buyers are there now, well, then it's definitely bullish, and you might as well just, like, follow it. The hard part is that on a higher time frame, like if we go to the 2-hour chart, sorry about the fighter jets, they like to fly right over the house right at this time. Hold on, let me just wait until he passes because I don't want to scream or yell. Okay, so if you think about this consolidation, we have an anomaly here and then an anomaly down here on a smaller time frame than this, and you can see how those do tend to act as support and resistance when it's not trending. So where I got confused, or just where what I did wrong, was I was looking at it. I was looking at these levels as if they were very small time frame, when in fact they're not. They're based on the 30-minute time frame. And so on the 30-minute time frame, if you look, we were trending here, which is why we blow right through the purple, right? And then because of that, the pullback, if you look, if you measured this pullback, I don't know if this works out perfectly, but let's find out. So if this is the low, I guess you could use this one. And then this is the high. This pullback, it did close below the 61.8. I didn't think it would, but it did. It barely did close below the 61.8. I don't know. I thought it was probably right around there, but apparently it did close below it. So that method would not have worked. But the fact that they did bounce right off of it is interesting. And for now, they're doing another pass apparently. For now, I'm going to assume that if we do come back into this, that buyers are going to continue to support the area. If they don't, we're going to come back and test this low. There's no question in my mind about that. If this push fails, like if we like double top, or we come up and get stuck at 39.87.25, and then they don't show up here, like at least at 39.2275 or so, I am not looking for a buyer to show up down here personally. I think if this third pass really, uh, if this, see how much volume there was into the close. If it gets under this whole move, it's not bullish. But until that happens, there's really no reason to short it either, because there are shorts stuck below us twice now, and the potential for a pretty massive squeeze is definitely there. So just want to make that perfectly clear. I know that probably sounds like I'm trying to like talk my way out of making a commitment, but the truth is we're just on ES, we are in the middle of this consolidation range, and we're trying to break out bullish, but there hasn't really been any follow through. So I'm going to assume it will follow through, but it's not necessarily trending on that bigger time frame. But look at NQ. So this is what's interesting. On NQ, that same exact picture, we have consolidation down here, we have the lower low, right? And then remember on the higher time frame, because of this reversal pattern, it actually looks like they saved this level, and usually that results in coming back up to suck up liquidity up here, generally at least up above this and sometimes above this. So and that's exactly what they did, but it took 1, 2, 3 tries to break out of this consolidation, which is super normal. That is just how they trap day traders. That's just the way it works. And I know it's frustrating, but it's just the way it works. If you're gonna take the breakout trades, you need to be willing to have a place where you can decide that you're wrong or early and be ready to take it a second or even third time if it sets up good enough for you. Of course, here, if you knew where the value area high was and you see that it's aligned pretty nicely with that fib level that I drew off the voodoo range level, you could have waited until that got a close above, which is here. And that happened right after the CPI, but before the open. So the open is actually 9:30 Eastern. And while we did trade underneath the open, which is what I originally called for when we were way up here, we couldn't close below that swing low here from the open. So, this is the CPI trap. They trapped sellers, went higher, came back, tested below the open, and found buyers. Like you can make it as complicated as you want, but the truth is that's all we have. That's the only information we have. We have trap shorts stuck at the bottom of a consolidation, and we have sitting ducks up here waiting for their follow through sell stops to get hit on a higher time frame. Usually they're going to get hit. Sometimes they don't, right? Sometimes you trade underneath this bar and it absolutely gets stuffed. It can happen. But until we have any evidence that this is weak, we should be thinking long only, in my opinion. Because you can lose a lot of money trading against the trend. And so once you identify that there's unidirectional momentum, what I personally find works the best is you don't trade against that trend until you have a time frame at least higher than the one you want to trade on that has flipped. So let me show you how I do that and how I did that today. So this is the 80 tick. This is one of the higher time frames that I even look at when it comes to making decisions about direction. What you'll see, this is a simplified version of the algo, which is a more complex version of the trade and perform algo. You can see that it's a Renko chart, 80 tick per Renko bar, and it is this is NQ on I route through CQG, and there's this ENQ, and then I have it also routing through MNQ so that I can take trades in my cash account on micros, but I'm primarily using my what's it called, performance accounts at Apex, where but I'm routing through Rhythmic, so not here. This is just for analysis, and I execute on the DOM on Rhythmic or Ninja, depending on if I'm using the trade copy or not. So if we look at overnight here, so this is Monday, right? You can well, I guess I don't want to go too far back, but the way this usually works is, like I said, the bigger time frame is going to give me my levels, and then as I zoom in, I'm going to get my direction clarified. Now I do have more levels from the profile, but I'm hiding them on this time frame because they get they're I'm normally looking at them at like the 15 tick or the 24 tick. So on an 80 tick, it looks like there's no space to trade. But notice that this choppy area here, it's yesterday's volume point of control to the market profile point of control. So if you're going to trade that, the way to do it is to make sure that your longs are coming after a trap or a test down here, and your shorts are only coming after a test or trap up there. And then the same can be said about single prints, which are these green areas. So this one is green, but it's got the dotted lines. The easiest way to avoid getting totally chopped up if you're going to trade mean reversion, like from one side to the other, rather than with the trend, is avoid any setups that occur inside of yesterday's point of control and inside of these single print areas, because they are especially when they're stacked like this from inside the day rather than being like at the low or at the high, but instead like in the middle of the day of the RTH profile. Here, I'll show you. Easier to just show you. So on the profile, these single prints, see this? These, now that we've been filled, first of all, now that they've been filled during RTH, I'm going to take them off, but for the review, I'll leave them on. What you can eventually do is you can just mark off the anomaly in between, in my personal opinion, and then the edge here and the edge there with lines. And that's going to give you a better sense of where to take trades. But if you have something like this, where the single prints are at the end of the profile, these follow all the rules of like, if you trade inside and stay inside, or reject, like go inside, try to leave, but then reject, you're usually going to trade to the other side, right? There's rules for single prints, like whether or not you're going to fill them or not. That really only applies when the single prints are on the edge of the profile like this, like a P profile or a B profile, basically. This, while it might look a little P structure like, it's not. It's a trend day, and the single prints are actually this area here in between the main distributions, right? So it should make sense, if you know profile, that this area here gets a lot of action, and then eventually this area here is going to get a lot of attention. So we're likely to get up there, or at least we've tested it already, but we're likely to go re-auction this. And then this inside is just going to become a chop zone. So it becomes very difficult to trade, and it's usually where the POC shows up in the next coming days. Now notice we have double distribution here, and not surprisingly, the volume distributions line up almost perfectly with the single prints. So that's what I'm saying. It's not like your typical single print. See, let me find some more. Here's another one. Inside the day, right? Not at the edge. Here's one at the edge. Look at the difference. I've already deleted these, but let me just show you. So here's the single prints in here, right? If I spread them out, what do you know? It becomes a choppy area that also includes volume points of control, or at least market profile points of control, right? The one on the bottom, however, at the end of the profile down here, it's treated quite a bit differently. See? So once we got into it, and stayed there, we auctioned through it, which is very normal. And had we come back up and rejected it, which we may have, we have to look at it at a smaller time frame, you then see continuation in that direction. Now in this case, they put in more single prints and then went back through these and repaired them. So in the meantime, I have deleted that, but just realize that they will act very differently. The single prints will act very differently in the middle of an auction versus at the edge of an auction. So when you have single prints, especially multiple sets of them like this, you may want to like color code them differently, or just like I said, you could also only mark the edge, the high volume edges, and the anomaly in the middle, so that you don't get confused about the rules, because it is different. And generally, you're going to get points of control developing inside of these inner single prints a lot, because they only show up on trend days generally. They show up sometimes on double distribution days too. But usually double distribution days, you have a couple passes back and forth. So like this, This is a lot more typical double distribution. So anyway, that is what those colors are. And so let's go back to 80 tick and turn. So these right up here, right? And then this is yesterday's point of control. So like I said, it's going to be really choppy. Let's hide them for now so we don't get confused. So if you were trading overnight, you should have expected some choppy action. What I am primarily using the 80 tick for, as well as the 40 tick, two things. Number one, where are my preferred trade locations where higher time frames seem to be making some decisions? And then number two, do I have a clear sense of direction, and where would that change? So, for instance, when you get two purple bars in a row, like this, okay, and then below that, you trade lower basically than that. Once that occurs, the level here, see how like they try to come back, but they can't retrace this, they can't repair it, because remember the purple bars are low volume areas basically. They're low volume nodes that are created from in this case it's buyers pulling their orders off the order book, and when it's way up here at the top of a rotation, that doesn't make a lot of sense if it's bullish, because think about what that actually means. The auction was increasing. It made a new it approached the high, or did it make a new high? I think it made a new high. And then suddenly buyers pulled their orders, causing the market to fall on very low volume. So just that alone is not bearish, but what is bearish is when you're then unable to re-auction that immediately and you trade lower, right? So as a result, this can be extended, okay? And that is going to be an area of like a decision point for whether or not buyers or sellers are in control. Now, what you'll see is that bar underneath the double pink or double purple, it needs to be a regular bearish bar. So for instance, 1, 2. So for this to be bearish, I need to get a bearish bar below this. Okay, they put a purple bar below it. So now I need a bearish bar below that, right? Because vertically, they're lined up. So these are buyers pulling their orders. It's not really bearish unless sellers follow through with some volume, right? I need sellers to show up down here before I am thinking that momentum's actually increasing. In this case, I get buyers here, and so where do you go? You go back up to the liquidity. Now, this is very normal when you're trading in yesterday's point of control. That's exactly what you should expect, are these little, like, things that look very bearish, suddenly get below an important level, and then all the sellers just disappear. That's just the way it works. But what you'll see is that level continues to be important, and eventually they do get a bearish bar below it. And so by the time, and then we also had another set of double purples with a bearish bar below it, right? And this set of double purples here did not get immediately retraced. So my thinking overnight into Tuesday, into like London here, is, wow, they tried to push it higher, but sellers are taking a stand here and we're getting some follow through. So therefore, as long as this holds, I'm going to be bearish. Would be my thinking. Okay. Now, when it doesn't hold, you can see this is the open. This is the what is it? Let me see here. What time is that exactly? Is that London open? I think it's London open. But there's a gap here. So the gap. So I believe that's London open. And suddenly things change. What you'll see is they wiggle around here, right? They test it. We get 2 purple bars. But look how they defend underneath it, right? Just like they did here. they now defend this, right? Which is the grayed out area. Now, look at, if you're able to, like that, if you see that, you know, what are they going to do? They're going to go get liquidity. Where's liquidity? It's right here, and right here, and right here, right? That's where they're hunting because it's balanced. So the other thing you can do if you're able is you can also look for the opposite, right? Pink bar followed by another pink bar that then gets traded above. So let's look at it that way. Like I said, if you get good at this, you can see them both at the same time and yeah, find it can be confusing for some, but that. So now look, this little pink bar, is it there or is it the next one? I guess it's technically, no, we'll say it's there. So that should now be trapped shorts because we've traded pink bar, bullish bar, right? So pullbacks should be bought in there, right? And if you wanted to, you could probably go all the way up to this, really, because actually you could really go up to here, because the pink bars came in and then a bullish bar formed after a wick. So this, anybody who sold here right before sellers pulled their orders should be expected to be buyers now in that same area. You don't know exactly where, but you know it's probably this low. It's probably going to hold. Okay, and it should. Well, now we have two inverse signals telling us the same direction. It's saying, whoa, if this holds, it's bullish. And this is saying, uh-oh, if we can't push anything lower, it's bullish, right? Well, it's probably bullish. And so do you get another opportunity? There it is. So you get one more chance. They sweep everybody out. See that? And then it should start to hold now. Yeah, look at that. Almost perfectly. And then that's probably it. No way they get another chance. Yeah, see that? So, again, where I personally struggle with this is I've gotten so good at seeing these that I will buy this. And that's not right. That's not the point to buy, right? That's the point to be like on guard for a setup. If you're going to take purple bar followed by star, which is a fine setup, but this is a very high time frame, but you'd have to think that these guys are extremely vulnerable and that you're going to get an immediate rush higher. What would make me think that it's not going to do that? Higher time frame levels. So even though purple bar star is a really good setup to the bull side, you don't take it here because it's setting up inside of yesterday's point of control. If it's set up down here, totally cool. But when it sets up inside this chop zone, you don't do it. Just like same reason you wouldn't take this short even if you were bearish. You wouldn't take this star even if you're bearish, in my opinion. You shouldn't. Have I done it? Yeah, I've made that mistake many times, right? Then you get this star and then two stars to the upside. Looks super, super bullish at first. But then if you look at volume, the yellow line, look where volume is going. Volume is dropping. And the buyers are putting in all this aggression. Okay? So when you see that, you can't be aggressive. You need to get a buyer. You need to get a buyer stopped out and then a seller trapped. And the reason you need both is buyers. These stars are points of aggression. These aggressive buyers are trying really hard to push the market, and they're not getting anywhere. See that? They're getting stuck because of the point of control of yesterday. They're getting stuck there. When you see that happen, it might be sad, but they need to get stopped out if you're going to get along, right? You're not going to be able to buy this and survive because these guys are getting aggressive and nothing's happening. So you don't want to follow them in. Instead, you want to sacrifice them, right? So you go back to the lowest one, which is this one, and you say, okay, I need to get underneath that dot. Let me hide the other drawings. I need to get underneath that dot. And then if I get a buy signal, cool, right? And so your buy signal would be on a smaller time frame underneath this dot. So somewhere like this. but we'd have to go to a smaller time frame to buy it. Unfortunately, that happened during CPI, so there's no way I would have taken it. It also didn't technically set up on this time frame, but it did set up on the other ones. So one way or another, wow, they're back. One way or another, that's how that setup works with the double pink and double purple. It's not, in my opinion, a buy signal or a sell signal. It's a sign of a line in the sand that needs to get beat. Okay, so if you want to be really conservative, you can throw a line on top of the double purple that got bearish bars underneath it that looks like it might continue, and you can say, okay, I don't want to do anything risky. I'm not going to buy this because we got bearish bars underneath double purples, right? And so if it sets up here to the sell side, it's probably a sell if it wasn't for all this other information that told us not to do that. But for sure, if that sell sets up and then fails, they're all trapped, right? Then all of these sellers in here are trapped. So our very best momentum trades, they won't come when you're chopping around the point of control. They will come after you stop out a bunch of longs, rip higher, stopping out the shorts, and then the shorts give up in an area that used to be contended. And that happens right here, right? This area that used to be contended, even though buyers are pulling their orders on a purple bar, they can't get anything going. Now, they did get a double purple here. So it's, again, if you're going to short this, I believe that's wrong. I think you need to see that level hold. So you can mark it like this and say, if this unretraced purple bar holds, I can get short. But I don't want to be early. I need to see them actually sell it. They just rip right through it, meaning now it's probably going to be a buy zone. And so if we pull back into that area, I expect them to show up. I don't know if we do. But one way or another, we get a rip. And now this is going to squeeze, right? Remember, this isn't a big time frame. So this went all the way down to 12,080. And now we're pushing all the way to 12,350. So it's not 100 points, but you know, it would be a huge trade. So, hold on real quick. Okay, we're good. Okay. So now I have these two areas as potential places where I want to look for pullback entries, right? But I definitely should not be shorting, okay? Now, there are other ways that my coach teaches of how to figure out that this has already been bullish, and you would actually know that quite a bit earlier. You would know that all the way, if you were watching carefully, you would know to start looking for bull trades all the way back here if you used his methods. I'm not really allowed to like give that stuff away, but just so you know that there was a reason to ignore this sell and look for pullbacks to buy if you know how to find a dominant wave. So okay, so then we squeeze up right into the open, and this was a move that wrecked a lot of traders because remember, we had not only the POC where all the sellers got stuck, but we had these single prints from Thursday where sellers got really aggressive on Thursday, but yet they didn't really auction it very well. So price wants to go back up there. That's just the way it works. Hold on real quick. Oh, what the heck? Okay. Yeah. So that but it does tend to act as a magnet. There we go. It does tend to act as a magnet. So we get trade. We do not want to fight this move. That's the number one thing on the smaller time frame, which we're going to look at right now. We do not want to fight this move. We already knew it was supposed to be bullish. So let's go back and see. Let me hide this. What we saw on the smaller time frames. Now, when it's going so fast because of CPI, you're not going to be able to trade it, right? So I'm not even going to worry about these trades because this all happened in a matter of moments, right? The actual low is back here a bit. Yeah, but look, this is like 1/10 of a second difference, right? So you can't take that trade. It's not a good idea. So now here we can do just one at a time for a minute. So you're still inside of point of control. There's now been 10 minutes since the news is out. Everyone's kind of had a chance to sort of digest it, and not surprisingly, you break back out over yesterday's point of control, right? So if you weren't willing to take the divergent star here, which, like I said, I think it's pre-market, like, first of all, and second of all, you're inside point of control from yesterday, but you're retracing it after breaking out. Look, we broke out of it, came back in, retraced the whole thing, came up, came back to the middle of it, and then broke out. I think, personally, that this is a better trade. So you get another breakout and you pull back, and it actually acts as support. I think that's a little bit better, personally. Plus, I like using these little dots. I like if I'm going to buy this or this, I want the bar before it to have a yellow dot, because it means that they aggressively sold this, and it's going to give me a better chance of a lift. Now, if it's purple, it doesn't need a dot, but it's really great if it has it. Really great. Yeah, so anyway, we get a lift there. They come into remember that's from the 80 tick we just drew, right? The area that we said sellers basically need to hold that. Otherwise, it's definitely bullish, right? So they do attack it. See that? They defend it, I mean. They do defend it. Or they try. We get purple bar with a dot, followed by, and a star, followed by the X, which is a star killer trade. And the fact this is purple with a dot means it can be explosive. And it fails. That sucks. Because the location's bad, right? You're trading right into previous days' highs. Yeah, and a voodoo range level and that area that we expect to get tested. So if you're going to counter trend trade, this is the kind of spot that you take the short. I don't condone it, but that's what I would prefer is to see this hold on a test rather than just jumping on it. But this is really your first opportunity to short because it was that location. I guess here maybe too. The beginning, if you want to, I wouldn't defend the beginning of it. I would defend the back of it personally. But then, yeah, and so like it tries to go, it can't. Now notice here we still have like two purple bars that got a bearish bar below it, and then they beat it, right? So there are stuck shorts on this rotation, right? And we have this from the 80 tick where we knew there were stuck shorts on the 80 tick as well, but it's the same information. So if you wanted to, you could, now that you know they're stuck, you could bring this all the way up here and basically say, hey, if I can come back into that area and get a setup, I want to be long. Well, purple bar, green bar makes sense to me to buy that. And then, but remember, this is resistance, so you might have to try it more than once. In this case, it just works. Purple bar, green bar, triangle up. That's pretty strong on its own, as long as it's bullish. Okay, purple bar or pink bar followed immediately by a purple bar basically means if you can break over this area, that's going to be support. So we know that we expected sellers to defend this. So let's now move it up here because I expect buyers now to defend this. Once they get over it, if it pulls back into that purple area, it should get bought. You could chase it. Oh, it never comes back. That's too bad. So then we get into these little single prints, the middle of the day single prints. At this point, the market is opened. I see that was the open right here, was this rip here. And so that was just uncontested. Everyone's short. If you were going to sell it, you'd have to sell it there, but it wouldn't have worked very well. Now, like I said, we should not see these as the kind of resistance that we want to use to counter trend trade. But we should expect that this middle area actually acts, it might get some defense, especially with a voodoo range level there. So I would not personally sell this because momentum is way too strong. I'd be looking for opportunities to buy, and that's it. Purple bar star above the gray line, right into my what's it called? The channel, right? I wish it came down here and tested it, but it just didn't. So you just had to be more aggressive. Then you had double divergence here, the dot with the background. Now what I'm finding is that the backgrounds being green like this works a lot better when you get a pink bar above it. And that pink bar cannot have a green background. So in that case, these green backgrounds got pink bars. So this is now bullish. This green background got a pink bar. So this is now bullish. That makes this entry pretty strong. But note, this pink bar also has a green background, and we have not gotten any pink above it. This one has a green background. We have not gotten any pink above it. So as far as I can tell, we may be stuck here until we get a pink bar above it. There's your pink bar above it. So if you weren't sure if you wanted to be bullish or not, like if it was like too late to chase and stuff like that, well, now that you got the green background and a pink bar above it that doesn't have the green background, it's at resistance, right? So you don't just want to chase it. But if I now get a pullback into this bar or right under it, I can probably buy it. So they pull back, and where I want it set up is right there, and it just doesn't set up. It just doesn't fire, right? Instead, they pull it all the way back to here. We get purple bar with a dot, followed by star up with a dot. It's usually pretty consistent as long as it's bullish. And this one fails and then recovers, which is just the bullshit of the first 30 minutes. Sometimes you're going to get bullshit moves like that, particularly in these single prints. And so you went underneath it. They tried to act as resistance because people, algos basically, respond to them as if they are real single prints, but they're not. They're inside day single, like in inner single prints. And so they're actually pretty easy to trade through back and forth. Oh, that one actually completely fails? Oh, I don't remember that. Okay. That one completely fails. Interesting. I'd forgotten about this little pullback. So they try to use this as resistance. We had no double purples anywhere in here. Oh, yes, we did. Right here. I'm wrong. We did. Double purple could not get any bearish bars. They squeeze them out. Right? As far as I know, that does not continue to be important because we squeezed them out, but let's see. I'm curious. Here I don't really have a setup. As far as I can tell, I'd have to trap one of these orange bars now with a bar that's not pink. Now we have green background, pink above. Now I can buy down here if they pull back. Green background, no pink above. Be cautious. Don't chase. Right? Wait for the pullback. Pull back, purple bar, star. There we go. Right back where I want it. In the area of this green background after getting pink bars above it that didn't have the green background. That's your primary entry. Where is your target? Back up here in the middle, in my opinion. It does take it pulls back halfway in, but again, green background, pink bar above. This bar's range becomes a good entry on a pullback, and you get your target, more or less. Now, if you were waiting for the voodoo range level, you got skunked because of this inside of the day single prints, and that was a little frustrating. I took stops on runners here. I got paid, but I took stops on runners. That was frustrating for sure, because I expected Star Killer to work, but it did not get a pink bar. So you can just, if it does not, if the X's do not have a bar above them, like see the X's with the star with a pink bar above them, that is usually bullish. But if you get an X and there's no pink bar above it, in my opinion, it's risky. And then once you've traded underneath that X bar with a POC below it in particular, like here, we can expect this to be resistance. Although if we retake it, it can squeeze. So at this point, I was thinking, wow, that's a pretty big move. And then I looked and I realized that the tops of these apexes don't have yellow dots. So sellers didn't put a lot of energy into that sell, yet they got a pretty big pullback. And so my thinking here is, you know what? While it looks really bullish, we might be balancing, was my thinking. The thing that could have kept me trading more effectively was identifying the double pink bars here and seeing that we did get a bar above it, meaning that until we trade behind this and find sellers, it's probably support. So this is double divergence, dot with a green background. As long as you get a pink bar above it, it's good. And there it is. So that's the next entry in my opinion. It was choppy as hell, but it worked if I remember correctly. Yep. Now you got your target, which is, like I said, the middle of these, in my opinion, is the better target. So yeah, the fact that they didn't put dots in here made me very nervous that this was gonna break down, and there were just too many stuck shorts to make that work for the sellers. It just didn't set up. It just didn't set up, right? I would have been fine if it did, but it didn't. And the reason it didn't is probably because it was stuck inside of this single print area. God, these planes are so noisy. I'm sorry. So now we got green background, pink above. Okay, I want an entry pullback in here. Pullback entry there. It does not develop. No opportunity for me, really. It just squeezes. So unless you wanted to be aggressive and take this one, or you saw bullish pink and you didn't buy right away and instead you just waited for this, that works. God, they just go right back and forth apparently today. Okay, so it comes all the way up and it retraces most of this one. Then it gives us green background, no pink above. Be cautious. Okay, we also got 3 pinks in a row with no pink, with no bullish bar above that wasn't pink. Be cautious, right? Bulls put 2 pink bars and got bull bars above here. So as long as this holds, it's still bullish. But things have changed a little bit. Starts to chop. We get star killer, no pink bar. Very, very, very dangerous. Just like this. Star killer, no pink bar. They're probably going to go back to this support down here. Okay, that's just the way that plays out. I don't have a double purple. I don't really have a reason to short it. Other than I had a level on the I don't think we're there yet. Eventually we get to a level that I had on my candlestick chart. I don't think we got there quite yet. Okay, so now we don't make it back to the level, and I did not get an entry here. Some people took POC above triangle up, and that's fine. It was at the voodoo range level, so if you had trend day up, pulling back into the voodoo range level and confirming higher, could have gotten it that way. I saw this get given back, and I wanted to wait until they reclaimed it. So once they reclaim these X's, it can squeeze, generally. See that? It can totally squeeze. The weird part is that we got... God, stop. Wow. It's like the 6th pass he's done. Sorry, guys. They're not usually this bad. Windows are rattling because he's so damn close. Sorry. Wow. Go away. So, no pink bars above the green background make me think that I don't want to buy a pullback here. And then I get another background here and no pink bars above. So even if I didn't have a level here, that is cause for concern because it means this level is probably not going to be defended. And you can see that they try to defend it and it just gets stuck, right? Once we've gotten a POC underneath a green bar, we should expect all other green bars to get taken back. So this bar here gets a POC under this green bar. It should be a short to here. Green bar should get taken out. Green bar should get taken out. Maybe not right away, but it should. Oh, but it's interesting. They got divergent bar followed by pink bar. So that means this should be support. So maybe you can buy that one. And then they go and take it out. Okay. Yeah. Sneaky. Like I said, it's choppy in these inter-day single prints. Very hard. It's not usually that hard. Honestly, it's not usually that hard. Okay, they do trade out of it on some news about drone in the over the Black Sea getting taken down by Russian fighter jets, and we get a big dump, right? No, we did not have any double purples here, but we did on the smaller time frame. On the smaller time frame, we had a couple sets of double purples with bear bars below, and I had marked off, here's the highest one, I had marked off this level as a potential sell. Not from the smaller time frame. And that one
coincided with the location on the higher time frame, meaning it was a pretty good sell. And we remember at this point we'd already kind of ran into resistance and started to chop around back inside these inner single prints. So we no longer have to worry about fighting a trend day because we're not doing this straight up camp, ramp, camp, ramp, camp. We ramped and then we actually pulled back significantly by the time we got that level, which was here. And then boom. Right now, at that point, we have purple bars getting bearish bars below it. I'm assuming that this is now going to be resistance. And it is. But then they break it. I took a stop here. I eliminated it. I shorted the hole. Went for 10 points. Got 8. Did not get out in time. Took a full stop. That sucked. And you just don't know when they're going to come. You know, eventually you're going to take a stop. Yep. And then there was one more I took too. Okay, so green background, no pink bar above. It's probably going to get wrecked, right? We're probably coming back into here. Note, this one does not have a blue dot. So it's probably not going to act as support most of the time. If it doesn't, they get under it. Then this level acts as support, which came from all the way back here. Double pink, right? Act as support here. Traded below it, came back up. Tried to act as support here, and it failed. So that one is definitely done. They're doing serious exercises today, guys. Sorry, I guess after this, maybe it's because of the drone thing. I don't know. It's not usually this many. Okay, 2 purple bars. Purple, purple. We need a bearish bar below it, which happens right there. This is the high. Purple, purple, bear. See that? This is purple too. But this one as well. Purple, purple, bear. This needs to hold for it to stay bearish, and I would expect it to do so. If you get a pullback into this bar's range with a bearish close, you can usually short it. That made my money back from the stop. Right? Because it's still bearish. There's nothing's changed. But then look what we had. Purple, 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 green bar, triangle up, plus sign. Assuming it's at location, it's okay to take the counter trend trade now. Because this, if it was going to increase momentum, we need bearish bars down here. And like I said, the seek and destroy mission when we trade underneath one of these green bars is to go back and take out every other green bar we made. So green bar gets traded under, this green bar should fail, right? And this green bar should fail. When it doesn't, pay attention, right? If this holds, it's bullish, and you don't want to short it. So they come back, they find a buyer, and if you look very closely, we got double divergence right here, dot with the background, pink bar above it. Any pullback can now be bought. And it just didn't set up. Unless you wanted to chase it. If you were being conservative, you did not get an opportunity here. And that's what I was talking about. I didn't get the opportunity to exit my short, the puts. Because that would have been it. Once this X gets beat and you get a close above the high, it's not bearish. And the fact that we had triple purples not produce any more bear bars below, and we got a green bar that didn't get immediately taken out on the next pullback, it's done. Plus, if you look at where volume is, this dotted line, you can see that we are clearly trading below all the volume. And so you would expect this pullback to get sold. But instead, volume shifts and the sellers are just gone. Right? So you might not know that it's coming, but once this purple area from the 80 tick holds again, now I'm looking for double pink bars, pullback, and long. Okay? I don't want to be bearish anymore. Now, in this case, we came back up into this earlier location and gave us purple bar, green bar. I missed it. I did not take that trade. I probably should have. The challenge here was that it also got a blue plus. And usually if you get a pullback and a trap underneath that, it's a good long. And I was ready to take that trade, and it did not set up. But what we did get was purple, purple. Wow, that's like the what 10th time they've gone over my house. Purple, purple, no bearish below, and green produce a triangle without getting taken out, right? So unless they trade under this, it's really bullish. Purple, purple, no bearish bar underneath it, plus bar gets a trap. That's your long. And that one failed. And I think it's totally fine, right? Like I said, I took 2 full stops today and they were on process. Sometimes, especially when you're in these weird ranges, you just don't get the results that you usually do, and this time it just didn't work, right? And that's okay. It breaks down. We did get purple, purple bear bar. We should assume it's bearish again. And then you pull back into there. Could have gotten bought, but you didn't get it. It just cascaded. Here's where I should have covered shorts. I should have now recognized, but unfortunately I covered them here. Because I missed this, and I'm like, oh my God, we're going to go back to high day. So I should have, the fact that I missed it here sucks, but I probably should have waited and gotten out here. Once this starts to work and you get pink bull bar, we know that's bullish. If they don't stop, I'm just gonna have to turn this off because that's really annoying me. They keep on flying over my house. They're just so noisy. I apologize if you're on headphones. Star Killer, pink bar, long, and it just keeps going. Right? Now, you don't want to fight this. You really don't. Where do we have a dominant wave? We had a dominant wave here. I think. Yeah. We had a dominant wave here. So by the time we printed this star, we should have known that this low should probably hold. And it does, and we should be bullish, right? It does pull back. It tested underneath it here. And if it doesn't immediately retrace it, it can be bearish. But we already had a location here from the higher time frame, or from earlier. It holds. They try to defend it. They reclaim it, and it's bullish. Right? And then you got another dominant wave right here. And so now any pullback in this here needs to be bought. If they show aggression, which they did. And so you're off, right? And then Star Killer, pink bar, go. You can add, and it just keeps going. It comes all the way up to the inner single prints again. They try to defend it. Is it going to work? Probably not, because it's really bullish, right? This X needs to hold, and it does. Green bar should continue to lift as long as it's followed by a star, but in this case, you probably don't even need it. Like I said, no more double pink bars in a row, but it can just keep going as long as it prints bars that aren't pink above bars that are pink. It's just going to keep lifting. Pink, bullish bar, it's going to keep lifting. Right? Now, this is after the close. Oh, no, this is the close. They put in a big seller close right at the high of this second set of single prints. And personally, I really doubt that works. So I'm going to delete these because they've been thoroughly redone. Wow. Yeah, I'm definitely going to have to end this. Then there's an anomaly right there. So, whoops, that was it. So that's going to get that. And then there's, and then today's point of control. is there. We have single prints. Okay. And we have this little area of single prints up here. See that? Which is butting up against a low volume node that's probably going to get swept, most likely, right? But remember, you've got double distribution around an anomaly. So first, we're probably going to chop around in that area. Now, the other thing that needs to change before tomorrow is these lows and highs can be moved. That's that one. That's that. Okay, and then you could put another one here if you want, but these have been, you can see that these were single prints. These were single prints. We've thoroughly re-auctioned them now, and this looks pretty natural, more or less. This does not, right? So we're probably going to fill in that area. And then if you look up here, this looks pretty new, pretty like normal, but this does not. So most likely we get stuck up here on our first try, and then we come back up and hit these naked points of control. If I had to guess, that's probably what's going to happen next. I personally think we go to 12,650 before we take out this low, personally. But news could change that, right? We don't know. But that's what I would expect. I think there's some resistance that we have to work through, but in general, it's going to work out. The one thing I wanted to show you, and I'm going to close it out, is I've been playing with the smaller time frames. And when you know the direction, that's a huge caveat. But when you know the direction, you can find, remember those spots where I said it just didn't set up? Where was that? Where it just didn't set up. There's a couple, so like this one, it did set up, but not until here. If you already knew at this point that you were looking long, and you could have, there were opportunities on this small, tiny time frame to take advantage of that if you didn't want to wait and you wanted to have better risk reward. The problem with trading the tiny 15 tick is you're going to take stops a lot more. They're just going to be smaller, right? For instance, you have double divergence followed by a pink bar. That's usually a really strong move in a bull trend. It had to get stopped out before you got lifted again. Double divergence, star, pink bar does go higher. So rather than getting like a 65% win rate, you're going to get like a 52% win rate, right? But your stop is going to be like 10 points, and you might get 20 on the times when they do work. So as long as you don't get discouraged by a couple stops, and you really want to make sure that you catch everything, you can use a smaller time frame. You can see that you have to be careful with the shorts, though, because you can get really crushed if you start going counter trend. Like pink bar, orange bar gets totally crushed, right? Pink bar star works, happens to work. This is the area that I really wanted to set up, right? But you can see that we really didn't get it until here. We got star, killer, pink bar. Now, it did work, but that's a pretty big stop. Stop has to go down here. I guess it's not horrible. 15 points, and you get it here. Right? Star, killer, X goes higher. With a blue dot, that's even... I guess I would prefer the blue dot was here. But that one does go. And so like I said, as long as you have the momentum correct, and then again, a pink bar that can't get retraced fully, if you get setups in their range, they're probably going to go higher. Pink bar can't get fully retraced. You get that star, it's probably going to go higher. Pink bar, fully retraced, stop buying. See? So you can use this tiny time. Now look, purple bar, bearish bar. If this is a big time frame, I'm thinking it's bearish. Sell that. And it works on the tiny time frame. Right? And you can do the same thing the other direction. Purple, bearish bar. This should be resistance. You get orange. Does that work? Yep. Purple, purple, bear. Okay, you technically would not have been able to catch this because you wouldn't know for sure. I guess you might have, but you wouldn't know for sure until down here. So let's see if he gets it up here. Yeah, ring on a lower high is usually better for these. You get the plus sign too, so that's good. Right, and there's no, see how there's no double pinks? And then everywhere where there's purple bars that can't get fully retraced, this one does get fully retraced. Purple bar, fully retraced. Yeah, that's hard. That's tough to take. You have to be really aggressive for those. That's pretty tough. Purple, so purple, purple, bearish bar, right? I'm really sorry about the planes, you guys. The jets are flying like crazy ever since that drone thing, so. You get above it, you know it's bullish. Okay, this area becomes viable. So it does work on the smaller time frame. You can even get it here. It does work. It's just that you need to know your direction. Otherwise, you're going to take lots of tiny little stops that are going to get really frustrating. And you have to be really, really good at identifying turns because, like here, divergence, green background, pink bar. I think it's going higher as long as they hold this, right? But you can't take this star because they didn't hold it. So if you make a lot of mistakes like that, where like it's a complex setup and you need like X, Y, Z to line up and then A, B, C to happen, maybe skip it on the smaller time frame because you're gonna make if you're making mistakes on those, it's bad. See, this is actually bearish, so now you know the direction. Star, killer, extension, lower. Pink bar or purple bar would have been better. Double purple, bearish. I would expect this to hold. It doesn't. Triple pink, bullish. This area here is now your support for a pullback. And as you can see, it took 2 tries because you could have taken this one. That one stops. This one probably works. Yeah. Doesn't work for much though because you're using a tiny time frame. What works better is rather than doing all your analysis here, do the analysis on the 24 tick. Figure out the direction. Be like, oh, I'm bearish now. I'm trading underneath yesterday's point or today's developing point of control. I've tested up into the middle of between yesterday's inside the inside of the day single prints, and we rejected them. So we should be looking for bearish trades. Now you might not have caught this here, but on the smaller time frame, if you knew you were bearish, rather than buying this, which is what the smaller time frame says to do if you're analyzing just this time frame, if you know on the higher time frame that's bearish, you've got star, killer, right, to take, and then over here, star, killer, purple bar. Double purple bar goes below it. That's your resistance. If you get a pullback, that's your short. It just doesn't get there. Does it get to this one? Yeah, right here. So bigger one, direction, location. Smaller one, execution. Right? Purple, purple, bear. Even if it gets to here, I can take it. That didn't quite reach it. And then, right, that one you can probably take. Yeah. So see how, like, as long as it's a bigger, it's better if the bigger time frame is, you have to see now that I've gotten this triple, or the triple purple, no bearish below, and then they pull back and they can't break it right there. If you now go here and start shorting, you're going to get your ass kicked, like straight up. If you take short signals, watch. Orange bar. So now if you were very observant, you'd see you'd have an orange bar. And these orange bars are getting beat by bars that aren't pink. It's not bearish. Do not sell orange bars. They will get beat. All of them. Right? And so that was something I did not do very well today. Plus, we traded out of the overnight, tried to go back through it, and bounced. So if you didn't know if it was bullish or not, at this point, you have to know it is. And you got to stop shorting. Then it's just a matter of where do I buy? And like I said, if you're chasing a unidirectional momentum, pink, bullish bar, buy the pink zone, the pink bar's range on a pullback. Buy the pink bar's range on a pullback. That one fits. You might have gotten 10, and then runners get taken. Purple, see, but look, purple, bullish. It's not bearish, right? Do not short this. It's not bearish. Instead, as long as you can't get under this, you're actually looking for entries. Right there. Purple bar, star, gone. Oh, maybe not. Didn't break this. Interesting. Surprise. One more time. They're very, very, very choppy today. Wait, what? Is this right now? I don't remember this. I guess it's on such a tiny time frame that maybe... No. It's fine. So yeah, that's right. This just pulled away. And then you got X pink bar. So I suppose you probably did have some hints on this tiny time frame. Purple, bearish, short. That's right. Purple, bearish, short. Once you identify the direction, those trades start to work. Purple, bearish. Now things have changed because you've gotten pink, bullish. So buy this. Double divergence, pink. Buy this. Purple bar, star. No star killer there. Nope. They got this. This star is dangerous up there, but they hold it in print. X, pink. That's usually pretty bullish. They got to hold this, and they do. Interesting that they gave this away and then reclaimed it. But purple, bearish could have made you think that you want to short in here, and that would have been a mistake because the higher time frame is clearly bullish. Pink, bull. You should probably be able to buy this. Star, it's probably buy. Yep. See, the sneaky part though is like pink, bullish. You can't buy this. Purple bar, star right at the top. Nah. You need a pullback. And then you get a rip. Pink, bullish. Any of these should give you pullback entries. Not all of them. See, this purple bar star, it's a little bit dangerous. But green background, pink bar. So a pullback, if this holds, is good to buy. It also came right into your double pink bar location. That's your entry. See that? So, like I said, the key is use the higher time frame, figure out the direction and the locations. Start with the big time frame, like an 80 tick, and come down to like a tradable level, like a 24 tick. I would definitely recommend doing most of your trading from the 24 tick and risk as long as you can risk 20 points per trade on NQ. But if it's not too fast and you can process it, you can get down to the 50 tick. Okay, I gotta go. These guys won't stop flying over my house, so I apologize again for the noise. I will see you guys all next